So how does Trump's tariff strategy and a weaker US dollar impact real estate in Canada and the GTA more specifically? Okay, this is part 2 of this 3-piece segment. Now, Trump's tariff policies and potential devaluation of the US dollar could have both short-term and long-term effects on Canada's real estate market, particularly in Toronto and in the GTA, which is heavily influenced by interest rates, foreign investment, and economic stability. In this segment, I'm going to cover the short-term impacts, so basically from now till the next year, and what I think the impacts will be on Canada and, again, GTA's local market. So again, we're going to look at short term. Number 1, interest rate uncertainty, which equates to mortgage rate volatility. If the tariffs hurt the US economy, the Federal Reserve may cut interest rates. The Bank of Canada could follow, lowering mortgage rates in Canada to keep up. Now, lower rates could temporarily boost housing demand as borrowing becomes cheaper. However, if tariffs cause inflation, rates may stay higher to fight rising prices, making mortgages more expensive. Now, in the GTA, lower rates means a short-term boost in home sales, most likely, as buyers will kind of rush to lock in cheaper mortgages. It also creates uncertainty, which could equate to cautious buyers delaying purchases until the market stabilizes. Number 2, weaker US dollar means, or could mean, fewer foreign buyers in the GTA. A weaker US dollar reduces the purchasing power of foreign investors using US-based currency or assets. Now, many high net worth buyers from China, the Middle East, and the US invest in Toronto real estate. If the US dollar weakens significantly, some investors may shift their money elsewhere instead of the Canadian real estate market. Now, the GTA impact, one, you could see a decline in luxury home demand, particularly in downtown Toronto and maybe high-end suburban areas. Mid-range housing market could remain strong as local buyers benefit from lower mortgage rates. Number 3, higher costs for builders, which means more expensive new homes. If Canada and the US impose tariffs on construction materials, the cost of lumber, steel, and appliances, will rise. Now, developers could delay or cancel projects if construction costs become more unsustainable, but this would reduce housing supply, keeping prices high despite economic uncertainty. Now, the GTA real estate impact, new condo and housing development would slow down, pushing more buyers into the resale market. And because of that, existing home prices could hold or rise as supply struggles to meet demand. So there's how you see the short-term impact of these tariffs and this devaluing of the US currency. Stay tuned for part 3, where I will cover the long-term impacts as I see them.